Cayman OTC-listed Cadence Minerals is an investor and cornerstone partner in the discovery and development of mineral resources. Recently, Cadence sold 2 Australian lithium and rare earth assets, turning an initial 1.7 million investment into equity in 2 public companies worth 5.5 million. But it also has investments in Sonora Lithium, Mexico, and Sinovac Lithium in Czechoslovakia. It is the Amapa iron ore project in Brazil, though, that is the real game changer. Valued by former owner Anglo American at $600 million in 2012, an investment of just $6 million has seen Cadence acquire a 27% stake in the project, with an option to increase to 49%. Today, Cadence has announced a substantial upgrade in Amapa's total measured, indicated, and inferred mineral resources to 276.24 million tons at a grading of 38.33% Fe. And I'm joined by Kiran Morzaria, live from Amapa's wholly owned port at Santana, Brazil. Kiran, good morning.
Good morning. How are you doing?
I'm very good, thanks. And the weather looks fantastic there.
Yep, it's about 35 degrees, hot and sunny. I don't think it ever changes here.
Wonderful, wonderful. So, Kiran, this is a huge step forward for Amapa, and Wardell, of course, are conducting your PFS, your pre-feasibility study. Can you talk us through where we are to date?
Yes, so this morning we released our upgraded mineral resource. That's really important because that's the mineral resource, number one, increased by about 50% from previous, 48% from previous mineral resource estimates. This has been redone based primarily by a group called Prominas, who have been involved and previously audited Anglo American's mineral resource here, and then Wardell Armstrong have carried out a review. This resource now has increased, as I said, to about 270 million tons. That 270 million tons, what's really important, a proportion of it now has gone into measured and indicated. The measured and indicated portion of that resource will be utilized. We'll do an ore reserve. The ore reserve puts the current economic metrics of the project and defines how much of this we can take out. We certainly expect to be able to have from this resource about a 15-year mine life, or in terms of a reserve, and that then is the second final piece of the puzzle that will deliver our PFS. The last bit is the tailing storage facility design and costing, which is nearing finality as we speak. So as I said beforehand, we're quite well advanced across the pre-feasibility study, and we saw, as we said as well, that Q4 this year is where we're looking to be able to deliver that. Well, sure. This quarter.
Yep, of course. Now, despite fluctuating iron ore prices, you've shipped several loads of iron ore, of course, from the stockpile at Santana Port where you are. Cadence previously said that gross annual revenues from Amapa could be as high as $725 million per annum once the mine returns to production. What steps do you need to take, or what steps need to be taken to get to that point?
To get to production, first of all, delivery of PFS. That is, as I've said just recently, it's effectively a stamp of approval from an external audit perspective on the economics that we've all known about, the prospectivity of this resource that we've all known about, but it's an external review that provides a set of economics, NPVs, internal rates of return, mine lives, cost of capital, capital costs and operational costs. That then feeds into then delivering a DFS, a definitive feasibility study. That definitive feasibility study is you use that to do project finance, either debt and or equity, to fund the capital investment, and then you go into production once you've constructed it. So, there's still these 2 stages left, which is effectively the DFS and then funding and construction. Then you can get into production. And as I said, the plan is to be about 5.5 million tons of material, the large proportion of it being 65% Fe, which is that we'll concentrate the 33% up to a 65% in our processing plant. And that, at this current moment, 65% is around $110 per ton. So, basic calculations, you're going to be sitting at the sort of 605 million dollars of revenue per annum based on those figures.
Fantastic, fantastic. There, of course, is another dimension to all this too, isn't there? It's a hugely important development for the region in regard to the region's employment, health, and education. Can you tell us what changes you've seen since working at the Mapper?
Huge changes. I mean, I think if I came to here where we are right now 2 years ago, well, even when we first visited in 2018, we were just having a meeting now. You know, we couldn't even enter the site. It was basically covered in bush. There was obviously no employment. And so really, since 2020, when we first start shipping some material, that capital's gone to be reinvested in the asset. And you can see some of the impact now. We can see, you know, revitalized administrative offices, a revitalized port to a certain extent, able to move material to the public port to ship. We've importantly, you know, the dams were left completely abandoned. Now we've got systems and processes to comply with the A&M requirements in terms of dam permitting. So the impact initially is the impact of our investment into it, which is, you can see physical improvements. You also can see non-physical or intangible improvements with our relationships with the communities, the municipal mayors, the governor, the Senate here, that are all very keen to get this project moved and increased. I think, as I've said beforehand, the impact locally, once it's fully there, will be around the 600 to 800 people, some of which will be sort of contractors, some will be actually employees. But the larger impact across the state and world and in the country is about 4,000 people. So it's a big impact, and it's a really important part of the state's tax revenues, GDP, once we get operating. But even with these small bits of impact, we do see a very positive, intangible feeling from the people, and also you can see some physical impacts that we've made through that investment as well.
Fantastic, fantastic. Okay, so moving on then from a Mapper, I mentioned at the start the successful sales of the lithium and rare earth assets in Australia. Can you take us through those?
Yeah, absolutely. So we've got the lithium assets, lithium technologies, and lithium supplies. And as you rightly pointed out, we invested about 800,000 in that, and our stake is getting bought out by 1.7 million pounds worth of equity in this new company called Evergreen Resources. The plan is Evergreen Resources will list this year, hopefully around November. Once it lists in November, we'll hopefully see a revaluation of that asset. What I find it particularly exciting is the concession that we're talking about is adjacent to the Finniss deposit owned by Core Lithium. Core Lithium is capitalized in the order, I keep on forgetting, but it's between 1.5 and 2 billion. I think it's closer to 2 billion Aussie dollars at this point in time. And it's a producing lithium oxide asset. So it produces the raw material at around 6% that gets shipped off to China and then produced into lithium carbonate. So when we looked at this, we did some early chemical studies, some geological mapping, and it looked really interesting. So, and rather than invest and dilute our shareholder value by, say, raising $6 or $7 million to carry on the exploration, possibly another 5 or 6, so there'll be like a total $12 million to invest, we'll get another party to do it. And that's exactly what they've done. They've raised 6, they're raising further capital to start the drilling and commence exploration of these targets. If they're successful, you know, we have a really promising, speculative, but really promising asset there that could deliver considerable value to what was originally a sort of £900,000 or 800 and something thousand pound investment. And, you know, and hopefully that will sort of achieve what, you know, something like our friends next door Core Lithium have achieved. So that's the lithium stuff.
Yeah.
And the other stuff, sorry, carry on.
Yeah, I was going to say, and also we mentioned, of course, Sonora Lithium in Mexico and the Sinovac Lithium project. And of course, you have an investment there with European Metals Holdings in Czechoslovakia. Can you bring us up to date on those?
Yeah, I can, but I think I forgot to mention, which was the rare earth asset, which was Hastings Technology Metals. That was the biggest difference. We actually bought that for 900, and we're going to get about $5.5 million worth of equity into Hastings Technology Metals. That's just exciting because it's already basically coming into production. Yeah. And they are now they are both the battery magnets raw material producer, or they will be, and they will also be producing battery magnets through their purchase of that 30% of a battery magnet manufacturing in Canada. So that's exciting. So all these projects are really progressing well.
And
so
of course they have that.
Carry on.
I was going to say they had that $140 million loan from the Australian government too, which just underlines how important that Yangibana project is.
Yeah, absolutely. I think they were saying they're going to be in production in 2024 off the top of my head, so that will be really good to see. So on Sonora and on EMH. EMH, I think we all know they're advancing a DFS. It's one of the largest hard rock lithium deposits in the world. Substantial, some multi-generational mine life, and the NPs are really great. We still have around 8%, and really we're now waiting for them to complete their DFS and then very much go through the stages that we would have with our MAPA, DFS, project financing, construction, and then strategically serving the battery market in Europe, which if we look at the build out of gigafactories, Europe next to China is going to be the largest big gigafactory and megafactories center or hub in the world, given its car production veracity. So it's really having that deposit there. It's got a huge customer base and it's very strategically located.
Sure.
And then, Sonora, as we all know, again, a very large deposit, clay in Mexico, bought out by Ganfeng from Bacanora Limited. Our joint venture is 30% of an area, although it's a substantial part of the resource or a portion of the resource. The reality, because of overburden, it only really gets mined in year 7 onwards. But Ganfeng have talked about increasing production to 50,000 tons of lithium hydroxide in their interim reports. However, they haven't done and finalized a full study, so we don't understand that impact. But obviously, if they're going from 35,000 tons of lithium carbonate in the phase 1 to 50,000 tons of lithium hydroxide in phase 1, that's going to have an impact and move the timeline of our stuff getting mined earlier. I think we have to see the mine plan, and that would of course increase our value, because our value is now time value. As to what's happening with the Mexican government, we're keeping au fait. Our view, as well as Ganfeng's, is our licenses are still fully valid, and continue to develop. I think Ganfeng will continue to develop that on that basis.
Super. Now, Kiran, as we know, it's difficult to keep shareholders happy all of the time. Can you provide some upcoming value inflection points for investors to look out for?
Yeah, there are 3 things: PFS, listing of our stake in Evergreen Lithium, and the last one is getting our shares in Hastings Technology Millions, that 5.5 million. So even in those 2 facts, there is actually an accretive value to our balance sheet. What is currently on our balance sheet at basically $1.7 million, suddenly at 1.7 million pounds, suddenly goes to 6.6 million or 7 million pounds straight out the bat, just on those 2 items. And then there's the intangible increase as a result of the PFS publication.
Of course, yeah. Well, as we're saying, I mean, a MAPA looks to be an absolute monster when production comes on stream, but that factor seems yet to be reflected in the company valuation. Have you any thoughts on that?
Yeah. So I think there's a very big focus on EVs, and that seems to be where the resource sector is. Iron ore has fallen a bit out of favour in terms of pricing. You've got to remember, June last year, when we were sitting at about 30p price, iron ore was at $230 a ton, 65%. So it was very high, and so we had that input. We then obviously had our 27% increase. We went back up to 30, but obviously iron ore has come down from 120 to down 100 in terms of 62%, sub 100 turn 62%. That has an impact on us. And of course, the AIM market, generally in risk-on basis, has a certain level of capital outflow. Stockpedia had a really good article on this, is that is the first place to be where you feel it. So fundamentally, people are withdrawing capital across the AIM market, down by 45%, across the AIM market, because of their requirements as a result of inflation. So we're being impacted by that. But ultimately, the iron ore project is still sound. We hope to deliver values that we've talked about beforehand. And these lithium projects have got plenty of upside in there. So I think there's my belief, and of course the market might not agree with me, but my belief is there's a rosy future ahead here for Cadence.
Well, Kiran, we wish you every success with completion of the pre-feasibility study and, of course, ultimately in recommissioning a MAPA. Kiran Morzaria, Chief Executive of Cadence Minerals, many thanks for joining us from the port of Santana today.
Thank you as always, Alan.